have to talk about, obviously, is crude oil. And, Stelios is probably going to be able to chime in here too. But what you'll notice is the sell off in crude. But if you look at like the front month contract, which is here, I'm gonna pull it up right here just so you guys can see what I'm saying. This is on Bloomberg. You'll see the crude's trading at $11. All right. The June contract. Okay, the June contract would be trading. I'm assuming around 17. I think this is where we're at. But let me just.
It's 22.
Is
So
it
it's
22?
yeah, it's
Okay,
over $10. Yeah, difference.
so that's what we call contango, isn't it?
That is correct. When it's upward sloping the futures curve.
Yep. So here's the current month contract that, and by the way, this rolls over tomorrow. So let's go to CL. This would be the next month contract. Yeah, it's at 22. So $10 difference. That's crazy. So what happens? What Stelios, since you're here, and this is like the widest spread we've seen between two contracts, probably
in
ever
history. Yeah,
in history.
Yeah.
So what is going to happen tomorrow when the contract rolls over?
Well, it's very simple. People who are long the May futures, if they're still long, they will get delivery of 1,000 barrels per contract of physical oil. Obviously, that's not going to happen. People just usually sell it and then they roll it to the next one if they don't want to take a loss. So that's what we're going to see. We're seeing basically today a lot of selling of the front contract to roll it to the next one, and that's why we have this huge sell-off in the front contract.
And so what we should be noting is that we are basically at trend lows on the next month contract, but still that doesn't mean that we can't go lower. I mean, the front month contract could be trading at we or the current month contract we could trade $8, $9. I mean, we're at 11 right now, but we could trade lower than where it currently is, right?
Just think about it. We have $11 difference, or 10 or whatever, and it's 1 month. So if you're buying that, the June contract, you want basically the value of 1 barrel of oil to be going higher by $0.33 every day, right? Or actually, no, it's 20 trading days, right? So it's even less. So $11 divided by 20 trading days. It's a lot that it needs to catch up by. That's why you get this contango effect. You buy something that even if spot oil doesn't go higher, this thing rolls down and loses you money every day.
So, I know people are trying to figure out a way to play this. And I don't think there's any reasonable way that you can really play this situation right now, unless you want to trade currencies, and maybe if you think that crude oil is going to bounce after this after the rollover, maybe you trade the Canadian currency, which, by the way, the dollar Canadian's at its highs and the Canadian dollar's at its lows as a result, right?
Yep. My favorite plays with big oil companies. I've got orders to buy equities that is lower, quite a bit lower, but that would be my favorite play.
Did you think that they may gap down today?
Yeah. We saw in the first gap down of oil when it went down to $20 from, what was it, 40 or whatever. You saw companies like Shell and BP just completely tank. And I think that might happen again. Actually, I also want to answer, there's a friend of ours who's saying here, I'm long May contract. What happens tomorrow? Well, if you're long the contract, you get delivery of the physical. That's the definition of the futures contract. So unless you want delivery, you either sell it or you roll it to the next contract, which means that you will take a loss. So
now, will brokers automatically roll them into the next contract, or do they automatically?
I assume so, but I don't know all brokers what they do.
I would no. My thing is I think that most brokerage firms, I'm just thinking if you're trading futures with, like, let's say Thinkorswim, they're going to automatically, if you haven't gotten out, they're going to get you out by end of business today. So they'll start liquidating because they don't want you taking delivery, obviously. So
yeah, you have to check. You have to check with your broker, basically.
Yeah, and I think most of them they give you a cutoff time. Like if you haven't exited by here, we will exit for you. So, and that's going to be my assumption, with crude. So, anyway, it's been really interesting move. So we've seen a lot of, we've seen a lot of Canadian currency weakness, as a result, as this move is, obviously in crude is taking place. Um, do I think it's warranted? Yeah. Matter of fact, if you like I said, if you really want to, trade the dollar Canadian, this little false breakout here might actually be, a good short. If you're like, well, I'm going to play it on the long side, play this crude move on the long side, that might be the better play. You know what I mean? So it's just a
Yep.
thought. It's a thought if you want to try to if you want to try to play, um, one of these one, something that's related to crude, but it's not really related to crude, right?
Yeah.
And actually, I should probably just do
My
this.
favorite, as people probably know, is the Norwegian kroner. I am short Euro Norway from just over 11, so I'm almost a break even now. And look at NOK in general. Euro Norway, USD Norway, it's up, but only a little bit, given the sell off of oil. So to me, that shows that the market is kind of showing us that it probably can't go too much higher. Obviously, famous last words, but I like the price action at this moment, given the oil market.
That makes a lot of sense, and so keep an eye on the krona. Keep an eye on the dollar Canadian. I think the dollar Canadian, like I said, I love the price action here. How we have possible false breakout. So if the dollar Canadian drops back below 141, this here would tell me that, okay, we're done for the day, with this move in crude or the Canadian. I think you watch this as well. Now, the dollar, has been very, very choppy. The dollar just in general. One thing I want to note regarding the euro, when I got up this morning, I'm like, wow, I can't believe we traded to 109. But then we rolled over, a little bit. So one of the things that I'm paying attention to, not just in the euro dollar, but in a lot of these currencies, you'll notice that the euro had overnight a false breakout, right? You'll notice in the Aussie, excuse me, we had a similar, false breakout as well. So, the thing is if you're looking at like the futures market, I should rephrase that. If you're looking at the S&P and you're looking at what's happening in the equity markets, the S&P is under a little bit of pressure. So when the S&P is under a little bit of pressure, I would expect that the dollar would strengthen. All right, at least near term. So, with the stock market a little bit weaker, the fact that the euro kind of failed up here is notable. And even though the currency market just really isn't doing a whole lot right now, I think we have to take note that the dollar is firming as equity markets are weakening. And what's also interesting is it's firming against the US dollar Japanese yen, which I'm surprised about. But the currency market has been very choppy. And one thing that I'm looking for to get a better direction of the dollar is I'm going back to the euro dollar, is I'm really waiting for the euro to trade below 108. And if it trades below 108, I'm going to become more of a dollar bull, because it's been really choppy and inconsistent as far as currencies go. It's been a very challenging environment trying to identify where the dollar is going to be and how it's going to trade. So I'm looking for reasons to be at this point a dollar bull, especially knowing where the S&P is kind of rolling over at and where we're failing at. So, Stelia, since you're here and maybe we can talk a little bit about this. There's not only did the guys in our chat room bring this up as well, there's a Wall Street Journal article about how traders have their most bearish bets on the street right now. Everybody's betting on the stock market moving lower. and I had the guys from my office in Greenwich. They did they sent over that article like on Saturday or something over the weekend, and you've got a lot of people that are leaning, on the short side of the equity markets, and I understand why. If technically, you can say, well, we're knocking our head up against resistance. We did the AB equals CD. We've had a recovery in equities, but is it warranted? How do you feel about equities here, especially knowing that the market is short, or at least looking short, and it seems like everybody is up here?
Well, I wouldn't say everybody, but it is prevalent sentiment. I think the main reason why we're not a lot lower is because everybody's looking for it to go lower. So I think I am still bearish. I still think that the S&Ps, originally I was saying 1800 to 2000. I think 2000, 2200 is doable. But first, we may squeeze out some more shorts before we can go lower. So I think we go lower, but first we might go a little bit higher towards
So you think
29.
you don't think 3,000 is out of the question?
Oh no, it could easily be done. Yeah, easily.
One of the things that is not being talked about a lot, because everybody's like, so laser focused on the virus, and its impacts of how it's going to impact the global economy. But what people aren't really talking about right now, and maybe what should be more of a conversation, is what about, and here, by the way, just if you guys aren't watching it, the dollar Canadian's kind of trying to roll over here. So just, pay attention to this a little bit. What about the election?
Yeah.
I mean, this election season is going to be really interesting because, obviously, and I'm talking about in the United States. This is presidential election season. There, I think there's going to be a fear for people to go out and vote. But let's just talk about like the outcomes. Obviously, if Trump stays in office, that could be good for equities, but how about if he's removed from office? Is that going to have a negative effect on equities? And I think that would. So I think, I know everybody's really focused on the virus right now. And like I said, what its impacts are of not only the US economy, but the global economy. What happens if it really looks like a feasible that Trump is voted out of office? If that is the case, I would expect that might actually be another reason for a leg lower in equities. I am a believer if a Democrat is elected in the office, that stocks will go lower. I am a believer of that. So,
Yeah.
and I'm not a believer yet that's going to happen. But for me, and for you as well, all of you guys that are involved in the markets, it's something that is a talking point, because we need to think about the ramifications of this election season as we head into November, into the fall. I know we're still trying to get through summer, and it seems like it's been a long year. Only 4 months into the year, it's been a long year with everything that we're all dealing with. But it is something that we should be starting to pay a little bit closer attention to, right?
Yeah, I personally think elections, it's very tricky. I think one thing we can all agree on: Trump is aligning himself with equities, and he keeps talking about the markets when they go up, he ignores them when they go down. But basically, I think we can all agree that he's pretty good at trying to get the spotlight where he wants it, and I think he will try to um, coincide a nice market rally with the elections. That's my view. And to be honest, if I was him, I would take this opportunity, let the market sell off, because hey, we're facing an unprecedented threat here. Obviously, the reaction to it from country to country varies, and some people are criticizing him. But what I think he could do is let the markets, obviously, we have a sell off now, and then we gradually rise up going into the elections. And that, if he times it well, that could really help his chances get elected. Because at the end of the day, the average American, they look at markets, they look at sentiment, they look at how things are going in general, and they can, people can shift their focus, let's say, very very easily. So I think he's a mastermind on doing things like this, and I wouldn't be surprised if he tries to do that. So let the market fall now, and then slowly bring it higher into the elections. I mean, I don't know. I'm just guessing here.
Yeah, it's going to be really interesting to watch this election season and how it's going to play out. I mean, and it's so, but that is, in my opinion, it's another factor, especially when you're dealing with equities and what to do here. Now, let's talk a little bit about equities, where we're currently at. If you watched the week ahead video, obviously I was pointing out that we had completed an AB equals CD. And what I'm really paying attention to right now is going to be this, roughly this channel support in equities and this low around 2750. And that's the level that really is going to signal to me whether we're, going to continue this equity market rally like looks like this, or it looks like this and we break through 2750, and then we start to see another downdraft in equities. And I have to remind everybody, and I know we've talked about this, but the equity markets is not the economy. And when you think about the economy, you're like, wow, we're in a in a recession, possibly a depression. What are equities doing here? Just remember, it's not necessarily, um, uh, uh, you know, that doesn't necessarily equate, and it doesn't always mean one, that oh, we're in a depression, so equity should be down at 1500. That's not necessarily going to be the case, especially with all the actions that the not only the Fed but the other central banks have taken as well. So let's take a look at what's happening in all these different currencies really quick. I'm gonna just do a real quick basic uh, review of what we're seeing here. So the euro dollar, and let me just also take a step back and say that the FX market is extremely choppy. It's been very difficult to read. If you look at what the euro's done since, this is back on the 16th of April, so last week, basically beginning of last week, and you can even go back, to the very beginning of last week. We've been really just bebopping around in a very tight range in the euro dollar. And so what I'm looking at right now is just making sure that we stay below 109 and we stay above 108. Now, I'm not saying that because that's what I'm hoping for. I'm just saying that this is the range that I think we need to pay attention to. And once we come out of this range, that's going to help us identify probably a better trend um, in the not only the euro but also the dollar as well. So I think that if the euro gets above 109, we have to be bullish here, and if we get below 108, we have to be bearish. But let the market dictate what the theme is and how it's going to move versus you trying to identify what you think is going to happen. Now, one of the reasons that leads me to believe that the equity markets might actually start to show equity markets, the dollar index might start to show some strength is the cable. The cable has been kind of leading dollar weakness, if you will. We had this this pennant 618 retracement. We did a short squeeze above the 618, and I'm gonna actually delete this for now. Let me get rid of this. Let me get rid of that. Okay. So we squeezed above this 618 retracement almost to a point where, got anybody who was short, got them out, right? And now it looks like the cable's starting to leak a little bit here. And that to me is warning us that, perhaps the dollar might actually start to gain a little bit of strength here, because it was weakening on the back of, this strong recovery in the cable. Notice the, where we failed, and I keep this up because this was the previous channel that we'd been monitoring for a long time, actually, before the market broke down. um this previous channel support acted as resistance, and now the cable looks like it's trading pretty heavy. So watch the cable here, because if the cable starts breaking down, that means the dollar strength might start making its way back into the market, and you can see it again in the euro, might roll over towards 108. Now, one of the currencies, I got up this morning and I was thinking, I was scratching my head going, why, we had equities were down like 1.5%, the S&P was, and we were trading near its lows when I got up this morning. uh, I sat here and I looked at, the Aussie, and I'm thinking, the hell is the Aussie doing up at these levels? Why are we trading, higher? And the Aussie, I have to take a step back and realize that 64 cents is still a really big level of resistance. That was the 618 retracement of this entire move. It acted as resistance last week, and we're just kind of, you know, backing our way up towards that 64 cent level. But the fact that the Aussie actually put in a false breakout to the upside, in my opinion, and you can see I have an alarm set up here because I'm paying pretty close attention to the Aussie right now. If we start breaking into new lows on an hourly basis, that means we're starting a reversal. Not saying that we're going to get a reversal, but once you start making, lower lows, we had a false breakout on an hourly. So you had a false, upside breakout. Then you start making lower lows on an hourly chart. That would suggest to me that, we might be, ready to turn in the Aussie. All right. Now, I don't think that the Aussie has a lot of, uh, the Aussie has a lot of downside. I think that it's probably going to be limited towards 62 cents, or maybe even 60 cents. But that doesn't mean that we can't see, some dollar strength, not only, against the euro, against the cable, but also against the Aussie as well. Kiwi also pretty strong, but I think one of the reasons why the Kiwi is so strong is because we're seeing the Aussie New Zealand show a little bit of a reversal here. So that's something that we should also be noting as well. Dollar Canadian, we talked a little bit about the dollar Canadian already, but I think the dollar Canadian's really influenced at this moment by what's happening in the crude oil market. The dollar Mex, you know this is one that I'm having a very tough time reading it, and therefore I'm not trading it. I haven't traded the dollar Mexican peso in quite some time, and you can see what we're doing here. So we're setting up a nice little, triangle pattern. And, when we set up these consolidations, these triangles, and we're in the apex of the triangle before we break out, it's very choppy and very directionless. And that's kind of what we've got currently with the dollar Mexican peso, is like this very choppy, directionless market. The market will show its true colors at some point. And that's the important thing to realize when you're looking at the currency market, is understanding that things may be a little hard to read currently, but that doesn't mean that it's always going to stay that way. We will start to see some trends develop, and the important thing is that that you're around to be able to take advantage of those as they happen, when those trends do develop. It sounds like we probably got a few questions that are coming in, Stelio. So let's see if we can, hammer out some of these questions that are coming in.
Our friend CP is saying that this expiry for oil is the 18th of May. That means you have the June contract then. So that's fine because the May contract is expiring tomorrow. Yeah, I mean, it's everybody seems to be talking about oil these days, and I had a lot of friends and people saying, how do you trade this? My answer is I don't. No, it's simple. And if I really, really want to take a view on it, I will go along one of the big three oil companies, and that's my personal view.
Yeah. Sorry, Deepak was asking about the Kiwi dollar. So, let's take a real quick look at the Kiwi. And one of the things that's going to lend the Kiwi some strength here is, like I said, the weakness in the Aussie New Zealand. The Aussie New Zealand is finally starting to show a little bit of signs of weakness. Now, we are at the 200-day moving average. I think that the Aussie Kiwi is really at support here. But if we continue to see a reversal like this daily chart, just so you know what this is dark cloud cover. So when we have this long white candle, big black candle, or a red candle, you can, since it is red here, but it hits a new high and then reverses, and then your follow through candle, this is a dark cloud cover, which is a bearish sign for the Aussie New Zealand. However, we are on the 200-day moving average, so it's hard for me to get super bearish just knowing where we're at. But the fact of the matter is that if the Aussie New Zealand continues to show, weakness here, then that's going to put in a little bit of a bid for the Kiwi dollar. So keep that in mind. Because the Kiwi, as much as I'd like to look at this as a short, I'm more inclined to be on the short side of the Aussie right now versus the Kiwi. But we do have a little bit of a wedge developing here. Okay, a little bit of a wedge developing. So again, you just got to be a little bit careful. Being too aggressive. The Kiwi while we're down at this trend line support, but I do think that it's setting up for a reversal. But I think more of it has to do with what equities do, because if equities continue to sell off, then that's going to be that's going to lend some strength to the dollar. And these commodity currencies like Kiwi, like the Aussie, maybe even the Canadian, but I think the Canadian's obviously being more influenced by crude at this point, is going to be, they'll be under a little bit of pressure. Also, one thing to note with the Kiwi, just like the Aussie and just like the Euro, these little false breakouts on an hourly basis, I think it's probably got the attention of anybody who's bullish. Anybody who's bullish, whether you're looking at the Aussie.
Blake, good morning. We just got Canadian data.
Oh.
Wholesale trade 0.7 versus minus 0.5 expected month on month.
Honestly, unless it's central bank activity or an employment data, I'm just not even paying attention to.
Yeah, I know what you mean. I just mentioned it.
But thank you, appreciate it. How you doing, Steve?
Good, mate.
Good. So we were just talking about, obviously the price action in crude, and Stelios and I have been discussing, the front month, the contango going on, and trying to figure out like the best way to look at crude. And if you look at, here's the current month in crude. Hi, why isn't it? Shoot. I don't know why it's not loading, so I'm going to have to reload it here really quick. Let me do that. We have the current month in crude. Why is it not loading? It was just loading earlier. Maybe. You guys have the same. I was loading it earlier. I don't know why it's not loading up.
You want to load the front contract?
Yeah, I'm trying to get the front contract.
Use US oil. It's a
well,
basically.
I was just trying to explain, to Steve what we were talking about
okay,
the front month that's trading at 1164 currently, and then the front the current or the June contract that's at what, $22 or something. So this, we were trying to figure out like the best way to possibly play this move in crude, and really coming to the conclusion that maybe even some of the best ways to play it might be through different equities, through different oil companies, or maybe even
because the costs are not that brutal.
Yeah, or even like currencies, and the dollar Canadian was a good example of showing us a little false breakout, because we've seen a lot of false breakouts in the FX market. You look at the euro above 109,
USD NOK also beautifully diverging. I mean, we are far away from the high.
Yeah, that's one of the other ones that we talked about, but we didn't look at. So I'm going to leave some currencies for you to discuss. But overall, the market's just kind of it's range bound, and the currency market's pretty range bound. And we're just looking for some more concrete direction, and I think a lot of that's going to come with some guidance with the equity markets. I think the FX market is still trying to figure out exactly how it wants to respond based on what the equity.
Speaking of market direction, where the best place for people to find it is going to be, right? On the Trader Summit.
Next week.
Oh,
yeah.
Oh, I got what you're doing. All right. The Trader Summit. Yeah, and you know what? Before I go, let's talk a little bit about that. And if you guys can put the link in
doing it now.
Yeah. If you guys have not, let me pull up the Trader Summit. Summit. Dang it. Let's see. I should have already had it up. I was not, I did not.
I put it on the chat if you want, Blake.
Oh yeah, there you go. If you guys have not signed up for this yet, sure. There we go. If you guys have not signed up for the Trader Summit, make sure you do so. This has got an amazing lineup of speakers that are going to be here. So, and it's free, and it's next Thursday and Friday. Is that next Thursday and Friday?
Wednesday and Thursday.
Wednesday and Thursday. So next Wednesday and Thursday. So it's going to be an amazing event. Make sure you guys get signed up and registered, because we have an amazing cast lineup that are going to be speaking. So, and we do have, we have the ability to have 3,000 people, but at once. So make sure you get signed up, because we will have way more registrants than that. So make sure you reserve your spot. So, and you can see what everybody's talking about. It's going to be a pretty neat event. So I'm going to pass it over to you guys, and it's all yours.
Thank you, Blake.
Thank you.
All right.
Have a great day, mate.
You do the same.
Thanks. Hey, Steve.
Hey, Still.
So, interesting day today with oil doing its thing.
Yeah.
We were talking about the US and the elections coming up, and there's a question I want to answer. One of our friends saying, do I think the 20 million jobless are going to elect Trump? Well, I don't know the answer to that, but I can tell you from my experience, from what I've seen over in my lifetime, I can guess that a majority of Trump supporters who have lost their jobs will not blame him. They'll say, look, this virus is just killing businesses. So I don't think you can say that 20 million jobless people, they're all going to vote for Biden. I don't think so. I don't even think half of them are going to vote, or you know what I mean, right? So it's I think there is going to be an effect. Obviously it's really bad when people lose their jobs, but we saw this here in Greece. Remember, Steve, when we had the previous government come in, they screwed things up massively. Lots of people losing their jobs, and I know many people who used to vote for them, and they still voted for them. and who had lost their jobs. So I wouldn't think that the people are going to change their thinking this radically. But obviously, your point is valid. So many jobless people, it is going to make an effect. But
we know historically and traditionally that recessions, almost always lead to change in the hands of power. I mean, so it is what it is.
I think it's
definitely Trump's chances of getting re-elected have been reduced substantially. As we were talking the other day, I think that if the Democrats had selected a candidate that had, less issues, the Republicans can, base, their thesis on, re-electing Trump, would be probably an easy election process for the Democrats. But Biden is a big question mark. I mean, there is a valid reason to question, if he's at his peak or whatnot. So that might play a role in determining the result. Still, I think that Trump's chances have been reduced substantially, and it's definitely. I mean, a few months ago, it looked like it would be a slam dunk re-election of Trump, but it's definitely not the case anymore. Now, going outside that, as as a third, as an observer, I would say, I really have to wonder what are the big differences. And now I am obviously focusing on the economy because that's what we focus on this webinar. I mean, markets and economy. So I have to wonder what are the real economic policy differences nowadays between the Republicans and the Democrats. I don't know if you can easily spot them, Stelio, but I say that I have a very tough time.
It depends which Republican, which Democrat. Sanders was very different to the others, but
No,
Trump
but I mean, I see from both parties willingness to spend. I mean, first of all, I think that fiscal conservatives have gone extinct completely from both sides of the aisle.
From every country in the world, pretty much, yeah.
Yeah, I would definitely agree with that. So I'm more or less looking at an election that's going to look more like an auction. Who's going to auction more entitlements and payoffs to the electorate than the other. So I don't see that much of a difference.
Yeah, that's true. The question is, what do the markets feel? Do they sell off or do they rally if Trump gets reelected? It's a tough one to call, I think.
I think it's very hard making the argument that having to do with how the markets view it, that Trump isn't going to be considered the best alternative between the two. Because, I've heard of and read of Biden's, main points. So his main points do include more corporate taxes, etc. So just from that perspective, I think that most likely the markets would prefer Trump getting re-elected.
Yeah, I agree.
Yeah.
Yeah.
But on the other hand, people believed that markets preferred Hillary to be elected in 2016, and that obviously wasn't the case. I mean, intraday we had, if you remember, a limit down when we got Trump surprising to the win, and then it had been a non-stop rally since.
Yeah. Yeah.
What else did we have during the weekend before we jump on the charts?
Not that much, really. I mean, on the virus front, there's the same. Obviously, there is hope of some kind of a treatment that might get tested soon. I mean, this is all a little bit still a little bit vague, but unfortunately, the infection and death rates continue. Countries like France, Spain, Italy is dropping a little bit, but the US as well. So it's still going, and like we said before, this thing will come and go, but the effects on the economy are going to stay probably for a little bit longer than people expect. So
I think for a lot more than a little bit longer. I mean, we've talked about that again and again. Listen, guys and girls, all those unemployed people are not going back to work the next day. First of all, let's hope that they're going to find a cure or a vaccine or whatever will do the trick. In essence, in reopening economies properly, and I say properly because it's one thing reopening some sectors of the economy, and another thing being able to go back to normal life, because the economic activity we had, especially in countries that unfortunately had built the last few decades of their economic model on consumption, is predicated on the fact that people will be able to live a normal social life. Because in an economy that has like 75% of its GDP being consumption, even if you reopen the economy, if people are still afraid to go out and spend, there is no way you're returning back to normal activity for the economy. No way. But even if that happens, the damage has already been done. And how long will it take to recover from that? No idea. It's not going to be very soon. So I think best case scenario, something like a year to go back to what we consider normal until 2 months ago. So keep that in mind for whatever you do. I know that the Fed is going to keep supporting the stock market, as much as they can, and especially if the dollar turns lower, which I think that it will inevitably do. The stock markets might be doing great in nominal terms, right? But the economy is not just the stock market in nominal terms. So for a resumption of normality in the real economy, I think it's going to take at least a year.
Yeah, I wouldn't disagree with that, mate. I really wouldn't.
Question about the DXY. We're definitely going to have a look at the DXY, which is currently, very mixed, undoubtedly. I mean, in the short run, this has been a very mixed price action. I'll show it here. And it's more or less the inverse of what you're seeing if you examine the Euro USD. So here is the DXY. Let me pull it up. Here it is. So here's the DXY. We're seeing, the recent whip showing contracting in range and contracting and contracting. And I think that there is a decent chance that the next move is going to be to the upside from here, perhaps to a higher high. But we need to see first a confirmation. How would I confirm? I would want to see this swing break the extremes of the previous swing. So let's say we have 101 and 98.30. So 101 and 98.30 is going to tell us where the next move is going to be. As I said, I would favor another push higher. I would want to see a higher high before, a turn lower. But I'm still sitting on my hands. I have some dollar exposure. I mean, I'm still short USD NOK, and I'm in the money, and I'm fine with that because this is a long-term position. But taking a position like broadly in the dollar, like being broadly long or short the dollar, I wouldn't be doing it at the moment. Definitely, and we know that almost as a fact because by observing recent price action, if I would rather say when stocks turn lower once again, I think that we're going to see the dollar go bid once again. And since I do feel that we are very close to seeing a reversal here in risk. Here's the example of the S&P. S&P tagged on Friday the quality target of the first leg higher with the second leg higher at 28.95. So we might as well reverse from here. I already, as I wrote earlier today in the chat room, I already took profits on my long position, almost 18%, and reversed to a short one to begin with, just a quarter of a position, because I still don't necessarily believe that we have seen the high. I wouldn't find it unlikely to move higher towards 29.30, 29.50. I think it's a likely probability. But momentum was clearly waning. I had already fulfilled most of my upside targets. So I thought it's about time I start reversing my position as I had expected, as I had planned, actually is the right word, to do since the beginning. So I think that if I'm right on this, the dollar should sooner rather than later go bid again. But I do think that's going to be temporary. So I do expect more dollar strength, but I do expect it to be rather short-lived, because I do expect that the dollar is going to suffer gravely as the consequence of having by far the most irresponsible fiscal and monetary policy among all the developed world countries. So in my opinion, there are two alternatives. You either believe that you can run as big of a deficit as you want for eternity and print as much money as you want indefinitely without any consequences, or not. I obviously belong in the latter camp, right? I believe that there will be consequences. So I do believe that the dollar is going to strongly depreciate at some point in the not so distant future, and we're going to see a big move lower. Now, let me go through some of the rest of the questions. Knock, knock, knock. I've got 3 tank loads of oil. Where do you want me to put it, Suzuki? Yeah, I know what you mean. Something tells me that's not going to be a very long-term situation having to do with crude. If you remember, I kept saying since we were at 30s that I wouldn't be surprised if in this case we even move to teens. But I think it's going to be a very short-lived situation, especially since we're pricing crude oil in dollars. So even if you look at the continuous, I mean, the continuous is like a blend. It's not a real price that we see here. It's like a blend of different contracts. But I like to use the continuous because it doesn't have gaps and because it gives us nice, smooth, solid price action, which you can much more easily plot and do technical analysis on. Okay, so that's why I use the continuous, for technical analysis. So we can even see the potential of a big descending wedge developing here. Now, I wouldn't be surprised if I saw an overthrow. We frequently see overthrows in descending wedges. But I think that there can't be much more left to the downside. Keep in mind, as Stelios and Blake mentioned earlier, the May contract, which expires tomorrow, is currently trading below $12. But as I said, this is the continuous, so it's more of a blend between contracts. It's currently below 18. And if you remember, 17 was one of the downside levels that I was looking as, very good support areas. If you zoom out, you can see why. If we go back in time, actually this contract doesn't go that much back in time, but 17 is a good one, a good level. We found a low in the past there, so that's what I think. 17 is a good level, and I know that contango is quite vicious, so being long and certainly finding yourself having bought at a good price is more or less a given in my mind. But the thing is, you also need to time it properly so you don't end up paying, a hand and a fist in costs of, holding the position. So, as always, what is the first thing you're looking for when you're looking for a reversal is, a big daily candlestick that's going to tell you that something is changing in the market. Now, keep in mind, we already saw the OPEC plus announcing 10 plus million barrels of a supply cut. The market was definitely not impressed with that, and it was underwhelmed. But keep in mind that that was just the warning shot. They're going to up the ante. Don't believe that there's a chance they won't. So they started with 10 million barrels, wanting to see how much of an effect that's going to have in the markets. They've obviously seen that it didn't have any real effect in the markets, so they're going to come up with more, and more and more until it actually makes a difference. And as always, I need to remind you that at some point, you're going to be short crude, or some people are going to be short crude, looking for quite limited downside. And then one day, at one point of a day, there's going to be some big announcement, and they might find themselves being 30 or 40 or 50% out of the money within a blink of an eye. Because let's take the continuous, it's currently trading at 1770. Now imagine if there is a rumor coming through the market at the moment that the OPEC is seriously considering another, let's say, $20 million barrel supply cut. I wouldn't be surprised to see crude trading within a few minutes at 22. So that would be from a percentage perspective like a huge move higher, like a 30% move higher, right? You don't want to be short in that kind of a situation. So in my opinion, there is only one way to be from this point on in crude, and that is long. But as I said, you need to pick the timing right due to the contango. And as Stelios said, the best way to do it is probably through being long some companies that will benefit from such a jump, while not giving you a hard time in holding the position. Now, having to do with gold and silver, we always have people asking for it. Gold had a very decent move lower on Friday after failing from the 78.6. It's now back testing this. I don't like inverted head and shoulders formations as continuation formations. I have to admit that. So I'm not really very fond of this. I just plotted it here because a lot of people were asking about it. Anyhow, we're back testing that. If you remember a few days ago, last week, I actually said that both gold and silver don't look like a good a good proposal to be long in a short-term basis. I repeat, in a short-term basis, because they were both looking like they are fatigued. Divergences were very much clear. In any case, having to do with silver, I expected a failure anywhere between 15 and 16. We came rather close to 16, and we're now attempting to break below this ascending channel. Look at the RSI divergence, very clear here as well. So I would be very, 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 very careful in what you do from here. I do think that the next move can easily be lower, but I wouldn't bet that it's going to be much lower or for a long period of time. Okay. So I wouldn't be selling necessarily gold and silver. I would rather look for any pullback as a buying opportunity. But on the other hand, I wouldn't want to be holding long positions in the financial markets if I really see all the signs telling me that they're temporarily going lower. Okay, so I'm going to be holding my physical, of course. There's no chance I'm selling that. But if I had a long position in the financial markets, if not reversing, I would definitely close it. Okay. Anyhow, below 15 in silver specifically, I think the chart is quite clear. Below 15, I think that the next downside target is 14.5, and that can happen actually in the blink of an eye. So keep that in mind. Let me go through IG. May oil ends 6:30 p.m. UK time today. Yeah, we talked about that. S&P could feel cash gap at 29.03. Oh, it can do more than that actually. The S&P can, in essence, come back and retest this horizontal support resistance area, which is even above the 61, slightly above the 61.8% fib. It comes at 29.50. So as I said before, I wouldn't be surprised to see the S&P trade another 100 handles higher than where we currently are at 29.50. I wouldn't be surprised at all. Having said that, in my opinion, the risks were no more making sense for me to continue being long. That was a nice run. My cost average was at 24.20. So, even if we go to 29.50, I'm not going to be dissatisfied by taking profits at 28.55 that I took and shorting 1/4 of a position. I mean, I'm totally fine with that. And in fact, I actually wish we can go to 29.50. It's going to give me the ability to add more to my short position at a better price. So, bring it on. I want to see more upside. I doubt it's going to be much more. I can tell you that much. If you remember, and if you missed it, I think it's a good opportunity to go back on our YouTube recordings, onto the recordings on our site, and find the discussion we had on Friday with Greg on this webinar. We discussed initially from an Elliott wave perspective, his point of view on indices. And we had a constructive conversation about potential developments from here. In any case, we both agreed that even if we have seen the low, if that was the low at 21.75 or whatever it was in the S&P, for example, we are long overdue for a pullback somewhere here. So, we both agreed that a pullback towards like 26.50 is probably a good proposition. Keep in mind, 26.50 from where I shorted is 200 handles lower, which is absolutely fine. It's a nice trade, right? So, I don't know if I want to bet that we're going to be seeing lower lows, especially with the Fed going overboard with what they're doing. But do I feel comfortable that there's going to be a very, very decent pullback from, anywhere between here and like, let's say 3,000? Yeah, I feel very comfortable. One more thing I wanted to mention that affects crude indirectly is natural gas keeps diverging. Look at this. Lower low in crude, look at natural gas. Another divergence, that's like the fourth, fifth divergence in the RSI, and a higher low. Previously we had a double bottom. Now we have a higher low in natural gas, while crude is definitely producing a lower low. So I like this divergence as well. Natural gas seems to have a very, very hard time plunging below 152, while crude has no problem whatsoever moving lower and lower and lower. So I think this is another divergence to keep a good eye on. Is there a significant resistance in 1 point? Can you analyze USD-ZAR? Yeah, I can. I'm going to have a fast look at exotic currencies, in a few minutes. Steve, I bought June contract today. So if continues chart price bounce, then does that provide similar? Yes, it does. It does. The answer to what Vivo 1818 asked. The cutting knowledge supply will take effect from 1st of May. Doesn't matter because the market front runs that. So it doesn't matter when the announced cut is going to take place, because once a cut is being announced, the market is already putting that in the price. Copper, palladium, and platinum questions. Okay, copper. Here is copper. Pay close attention to this ascending channel. Momentum is clearly waning here. And, we are attempting to break down from this. This might not even have been a bull flag. It might have simply been a pennant, right? Here it is. So definitely the implications are bearish. And if you remember, it was a few days ago. It must have been one of the last days of the week. Last week, of course. I'm in Wednesday, Thursday probably, when we talked about copper again, and they said that, listen, anywhere between here, worst case scenario 248, because 248 is a huge support resistance area. I expect copper to fail and produce more downside. So far price action tells me that we're probably not going to even make it to 248. I'm not saying it's impossible, but it looks like we might not even make it there. Okay, it looks like we might actually be breaking down shortly, likely within this week. Okay, now having to do with platinum, on the other hand, I had said repeatedly I had stressed out repeatedly the importance of 775 in platinum as a very key level. We did go over 775, but I mean, look at this. We've really failed to do anything. I mean, we're just consolidating just above it. 803 was another, confluence of resistances. Momentum is clearly waning here as well. The RSI has simply reset after being to very oversold levels. I mean, the RSI had reached low teens, actually 12, not even teens, or whatever it was on the daily. So I'm afraid that there's a big chance of a failure here as well. Again, having said that, you can still keep monitoring this ascending channel and determine from there where we're headed. But I have to say that price action looks very heavy here, and I wouldn't be surprised if we just fail from here. Now, having to do with palladium, I'm still short palladium. I'm not sure it's going to work out. I'm in the money. I'm not sure it's going to work out because so far this consolidation doesn't look that bearish. It looks more like a bullish consolidation. So we might see another move higher, but we might first see another move lower before higher. So that's why I'm still keeping that position, because we might see another move towards 2000, then perhaps another high, and then perhaps a much bigger failure, just an assumption, something like that. Or we might straight go higher, in which case I'm going to just get kicked out of my position at break even, which is, fine. I mean, it happens. Why to buy Cell or other company and not USO? Or you'll have to talk with Stelios more about it. I'm long oil in small stock account USO, which is tied to the front month futures. Do you happen to know what might happen if I hold it through tonight into expiration? No. If it works like other contracts, they might actually close the position for you, and then you might have to reopen it for the next contract. That's what might happen, but I have never traded this instrument, so I'm totally oblivious to how it works. So I don't want to give you BS. You have to look it up. Okay. I usually trade such instruments through CFDs of continuous ones, and that offers me the ability to not have to worry about closing contracts, switching to the next contract, etc. I like continuous price action. It's much easier, as I said before, to even plot on a chart and do technical analysis on. Let me go through some. Biden is flirting with dementia. Let's just say he's not at his prime. There is no question about it. Now, I'm not a doctor. Some of the clips really show him being very confused. I have to say that. There's no question about it. If he was at his prime, I mean, if that election was in 2016, which he seemed to be absolutely fine, I think he would probably have a very easy win in the upcoming elections. But I think it's a very big bet at the moment. Dow 30 was up last week, but it's on a decline now. Yeah, but I mean, we're talking about a few hours of price action, so don't really pay attention. Having said that, I'm the one that said that I really believe that stocks might actually roll over from here. So in general, I'm not in disagreement with you, but a few hours of futures trading on a Monday morning, because for the US it's a Monday morning, right? Early morning, doesn't make a market. So, doesn't say much about it. Now, I want to add one more market to the mix, and that's the DAX, because the DAX is clearly still in my opinion, in a corrective bounce, or at least so far it looks like a corrective bounce. I know that we have a little bit of a difference of opinions here with Gregor. He was more bullish than I am in the DAX. But so far, I'm seeing the possibility of having formed a double top there, testing this ascending channel once again. I wouldn't be surprised to see a breakdown in the DAX along with US stocks and even see lower levels. In any case, I have to say that despite seeing the DAX underperform, again, US stocks, as it has been the case mostly for the last few years, fundamentally speaking, I would feel much more comfortable holding German companies in a portfolio than I would any US company, almost any US company. So I have to note that. So bottom line, what I'm trying to say, other than, between blindly buying the S&P for value because it has dropped and the DAX, I would rather buy the DAX. So if I was looking into value investing, passively investing in one index and holding it for a prolonged period of time, also taking into consideration the currency, because keep in mind that especially if you're not a US citizen, using the dollar as your main currency for your everyday expenses, for paying your taxes, etc., it's not only what the index is going to do, is how much money are you getting back once you cash out your position in the index and you have to turn those profits back to your own currency, right? So, if I had to take all that into account in, investing in one of the two indices, I would go with the DAX, unquestionably. Do you guys have a couple of oil stocks that might benefit with higher oil prices? Thanks again. You know something, Skip? I'll tell you what we're going to do for you, because actually that's a very solid question. I'm going to convince Stelios. If need be, I'm going to blackmail him. I'm kidding. We're good friends, so it's not going to be a tough thing to do. I'm going to try to put a blog post in place within the next 24 hours. Exactly about that. About companies that somebody might trade to take advantage of an upcoming crude oil rebound. Is that good for you? Will you be happy with that? Okay, good. So keep an eye for that. We're going to make it happen. So until like tomorrow, the end of the day, we're going to have that in place. Anyhow, guys and girls, remember that Forex Analytics has some free pages. One of them is the blog. So I'm going to let you know tomorrow and we're going to post it there. Okay. So here's the blog. And we're going to post it there. Anyhow, I strongly advise that you have a look at our blog post. On occasion, we put on like some big blog posts on, but on a daily basis, Blake puts the chart on the day on, like every end of the US session, he puts the chart of the day on. And we will make such a blog post for you. Okay, I think not anything else. I mean, I think it's a good idea. I think a lot of people would be interested in something like that. Which companies are best positioned and have strong enough balance sheets to really benefit from an upcoming crude oil rebound without being in danger of going under. Because keep in mind, a lot of companies are going to go under. There is no question about it. Trump is okay. We can have a friendly conversation, but I'd rather not take it into politics. I have a huge benefit. I'm not a US citizen, so I'm not a US voter. And in general, those of you that listen to the show very frequently, you know that I will frequently say whatever I disagree with, both from the side of the Democrats and the Republicans. So at least, people might agree or disagree with me, but at least they know that I will equally easily criticize political opinions or theses or economic policies from both parties. But I'd rather not go into the conversation of making it political, having to do with, I'll just stick to commenting decisions and politics that are related to the economy, because that's what we do here. We analyze the financial markets, and when you analyze the financial markets, it is absolutely impossible to leave out of the equation any type of political decision that affects directly the economy, because the markets, under normal circumstances and even during these distorted circumstances, at least at an extent, follow and mimic the the health of the underlying economy. So I'll just stay at that level. So I think we have probably covered most of the questions. Hey guys, good morning. Could you please evaluate Kiwi? Yes, I'll actually do that and then call it a day. I already showed Copper that it's probably not far away from failing, and I'm going to say that I see the exact same thing on the Aussie chart and on the Kiwi chart. So if you notice, the Aussie, first of all, has initially got rejected from the 61.8 and previous support areas. Definitely, so far, not a big follow through to that reversal day that we had last week. I think it was Wednesday, if I'm not mistaken. But I have to say that against the 61.8, it looks like a good proposition for a breakdown. And if you look at the Kiwi, same deal here. Instead of a flag, we have more of a pennant. We seem to have already broken through it. And as long as we remain below, like, 61.20, 61.20 cents, I mean 0.6120 that is, I think that another leg to the downside and probably an acceleration lower is a likely scenario. So I have to say that from a risk reward perspective, both the Aussie and the Kiwi, although they haven't confirmed yet by posting lower lows that they are continuing lower, from a risk reward perspective, I think that they offer a good opportunity for somebody to take the bearish side here. Okay, that's what I think about it. So thank you all. If you haven't registered, and I'm in it, this is going to be, in my opinion, the online event of the year. You don't get people like Peter Schiff, Mark Chandler, Mark Yusko, Peter Bukvar, Peter Goodburn, Mark Newton, Adam Button, Lydia, Boris, Blake, Jamie, and Steve Anton on the same panel. Especially, I can tell you about the first 5. Those of you that are also interested in, in the bigger picture, I couldn't think of better people. I mean, let me be frank with you. When we decided on the list of people to ask, we could never even dream that all of them would accept to be on, and we're really privileged to have them on. And I wouldn't miss this event for anything, irrespective of, being part of the team that made it happen. I really wouldn't miss this event for everything. And let me also share my secret target here. I want to use this event to persuade 2 people that I really respect their opinions on the economy, Peter Schiff and Mark Yusko. They agree on most subjects, but they have a totally different view on cryptocurrencies. I would really want to persuade them during the event to have them on a debate about the future of the monetary system and cryptocurrencies. I would really want to have Peter Schiff and Mark Yusko on a live debate on an event in the month ahead. So I'm telling you in advance that that's my secret desire, and I'm going to do the utmost to make it happen. So let's hope we will have something like that as well taking place in the next month. Okay, so those of you that are Forex Analytics members, see you in the chat room. The rest, see you tomorrow.